Just quickly take it across and talk about Go Fashion's numbers and muted Q4 actually for the company. Gautam Saraogi, the ED and CEO, joins in to talk about the way forward for the company.
See, usually for us, quarter three is the best quarter in the year because of festive, and quarter four, immediately after festive, is usually the weakest quarter for us. So the fall in revenue from Q3 to Q4 is very normal in the normal course of business for us in our type of business. So the fall is genuine, and it happened even pre-COVID. As far as slowdown is concerned, there is a slight slowdown in Q3 and Q4, which we are seeing that there is an improvement in April onwards. See, the 8% market share was based on a FY20 number. We are over the next 2-3 years, we want to get to at least a 14-15% market share. We would at least want the single digit market share to go into double digits. So 14 to 15% is going to be our aspiration number over the next 3-4 years.
Let's actually look at in the pre-open session where HDFC Bank is, where TCNS Clothing is. Now, look, Itina broke the story that Aditya Birla Fashion will acquire TCNS Clothing. But in a sense, the fine print is starkly different than what we were anticipating because it's a share swap. In a share swap, the equity of Aditya Birla Fashion will get diluted, and shareholders of TCNS, they will get shares of Aditya Birla Fashion. And the deal has been done at a disproportionate discount to what the Friday's closing price was. So I think rather than selling it now, one is better off holding the stock. This will also lead to some dilution for Aditya Birla Fashion. Aditya Birla Fashion in the past has been a company which is in a sense trying to move into a lot of formats. And this is where I think markets are also realizing that what are they trying to do? They've got multiple platforms, multiple businesses. All of them have high growth potential, but somehow in my book, I think the focus, for this company is missing. It's Aditya Birla Group brand, great franchise, strong, formidable brands, but are they spreading themselves too thin? Then I just wonder, are they spreading themselves too thin? I look at Trent and I say, wow, look at the way how they are running West Side or taking their brands higher. But Aditya Birla Fashion is just moving into everything.
And Kunj, you look at Trent and you say, wow, but you look at the P multiple also and you say, wow, again, it's trading at significantly higher P multiple. I don't know whether the growth rates, although they are superior, justify that kind of price to earning multiple. And, we have seen this play out within the retail industry with DMart as well, where valuations were absolutely skyrocket at sky levels. And then as the growth rate started to slow down, we have seen the stock underperform. And therefore P multiples also eventually compress, although earnings have been pretty much steady 15-20%, maybe slightly higher as well. But if you ask my opinion, I think the best way to play retail is to specialty retail companies. And you spoke about one of them just now, Go Fashion. There are many companies like this. I think 7-8 companies. Go Fashion is there. Then there is Manyavar. There is Metro Brands. You could add even Landmark Cars to it. Ethos. I think all of these companies, the common thread is that they are focused on a specific product category. There's a huge runway for growth for them. They just have to expand their network. The balance sheets are strong and they can support a network expansion. And we are seeing that they are ahead of the changing consumer trends, preferences, which is why I think their growth rates will be significantly higher than the likes of Aditya Birla Fashion or Shoppers Stop or even some of the other retail companies. Also, they are in highly value-added products, trying to build a brand as well and create a moat for themselves. But of course, I think these companies are also pretty much expensive. I think that's where investors will find the next group of winners within the retail space, and not large format department stores, which are going to be competing heavily against the online players as well. I know that these companies I mentioned also have threat from online players, but their position is such that, I would say the threat is significantly less than the likes of some of the large format companies.
Let you go on that note. Thanks so much for taking time out and joining in and sharing with us your outlook on the markets as well as those individual stock recommendations. A quick check-in on the pre-open rates around the 18,100 mark for now, and you've got the Sensex up about 60 points at 61,100 levels. But let's find out the mid-cap strategies from our chartists. What is it that they're banking on this Monday morning as we kickstart a fresh new week? Naresh, what's on your radar?
That would be a buy on IEX. The stock has given a short-term flag breakout after making this huge recovery from 130 levels. The stock has continued with the momentum. A strict stop loss at 154 and the target price of 175.
That's at 175. Kunal, what about you?
Well, I'll go with Metropolis because I think that stock has confirmed a breakout on short-term charts. It's a classical breakout, more of an inverted head and shoulder breakout after a rounding bottom or a base being established for Metropolis at the 1200, 1220 levels. So I think it could be an interesting chart prospect for the near to medium term. Would suggest a buy with an initial target of 1335, stop loss 1260.
Right. Okay.